given the context to the candle spread on the MAGS ETF, right, in comparison to the upper end of the chart. Obviously, we had very, very large volume anomalies, something similar to if you guys go over into like AMD from the climactic top, whenever we started to distribute here on the weekly chart, you guys could see how the amount of consolidation and the amount of volume coming in were not really matching each other. And at the top of a trend above a previous level or at all-time highs, that's not the strongest sign in the world typically. It typically results in a trend stoppage. So that's exactly what happened in the MAGS ETF, right? And we all knew that distribution was playing out. We all saw in here the distribution uh, playing out to printer paper. No, that's just my white charts, man. I'm not that pale. I wish I was that pale. Nobody would ever talk to me. It'd be perfect. Um, so yeah, the amount of volume coming in on the MAGS ETF was very clear as to the market obviously wanting to redistribute. We had downside targets in this ETF itself. We had a lot of liquidity built around the September through October support above this gap fill. And if you guys can't see it, the gap fills from here to here, right? I'll delete all the levels. You guys can take a look. A lot of you guys don't mark your gap fills correctly, which is, it's okay, but it could also kind of hurt you. This is the candle close to the new candle open. I pull it to the left and take a look at kind of where the gap is sitting, and you guys can see how there's a lot of support built above that gap. There's a lot of buy stop raids right here. So if we buy or stop raid, if we reclaim levels into that April 7th window, and if you guys take a look, we have a lot of liquidity from the like mid-March to early March range that was kind of building up around here. We have a lot of liquidity based around that area. So if we undercut this into the new week opening gap, we fill that gap, and then you get a lot of confluence in terms of Tesla or Nvidia pushing lower to fill the entirety of the gap, maybe moving towards the swing low. You get Tesla, the other area of the equity market here in the Mag 7 that's a little interesting to me, meaning we are now rejecting the election progression gap here that we actually lost here. Sellers lost that. Or I'm sorry, buyers lost that. This is now seller progression based off of the break and base beneath, right? So they're protecting their progression on this candle right here on Thursday, right? So that's a very clean rejection. There's an internal gap right around here that we have from 258 down into the bottom of the election gap now. Right around here, which is also the equilibrium retracement. If you guys are looking at the current swing low, current swing high, that's right around your golden pocket as well. So I'll probably be watching Tesla at this gap fill, just for the hell of it, just to see what kind of goes on, maybe a smaller time frame day trade. But there's still $4 of the remaining gap to be filled here on the Tesla earnings gap here. Obviously, there's a lack of support. There's a lack of strong structural consolidation around here in regards to this capitulation candle, followed by kind of just like your reversion type of leg back to the upside. It more and less looks like a short-term short cover, and it more and less just looks like a set, kind of like a wave of big money that seems like a more of a short-term participant. You guys got to remember, short-term participants do exist in the market, right? So whenever they're accumulating where they previously were marking things up from, and they're bidding the earnings gap here from Q4 of 2024, and then they're taking things higher, 34% for a reversion, they could easily sell that off. I don't understand why people think, you know, just because Tesla sees a 34% reversion to the upside means it's exactly the bottom. And then they start chasing the highs, the IV's inflated, and then they get absolutely smoked in terms of a lack of direction. Throughout that March 26th, March 27th consolidation off the top of the election gap, and then things start to pull back, and then they start really experiencing that drawdown. So Tesla's in a very interesting spot for me is really all I'm trying to say here. Is it something that I am super dialed in on? No, not necessarily. But like I said, I really want to see what equilibrium does within this whole entire leg up. I do really think this was all just a risk reversal happening in the market. The biggest performers that you guys got to also kind of take into consideration on the recent leg higher was Tesla and AMD. Two names that have been in AMD being a very underperforming name, Tesla being the previous liquid leader. Now really, rolling off and really giving up every single little itty, every single piece of that move has been given up on Tesla. So that's not anything to really ignore, in my opinion. A lot of people were trying to like time the bottom on Tesla and whatnot. TLT, it's really hard to say what's going to happen with TLT or yields. I actually think the 10-year is going to move higher over the next year. Um, I mean, this is a really nice gap up on Friday here, and it looks really strong here in terms of like a weekly high or low. I mean, I think it would be a decent chart to trade off of with like your risk being established somewhere off of like around this candle on the volume increase on the high or low. Obviously, this seems to be like they are trying to protect this gap, and they're trying to pivot things above that gap, and they've already successfully done so, with that low a day being off of like this whole entire gap range here. This is also like a bigger time frame pivot, if I'm not mistaken, here on TLT on the weekly chart. But I just don't really like trading this. I don't even know how people really do, but like I know some people do it successfully. I prefer commons over anything on a name like this, but the chart doesn't look bad. It looks pretty solid. Decent risk levels to play off of there as well. But yeah, guys, that's all I'm really looking at for in terms of Mag 7. Like I said, the Mags ETF is kind of like my market gauge here moving forward. This doesn't really look good here on the weekly chart. Obviously, this is showing us that this is really ultimately failing a previous resistance here. Does it really matter? No, not necessarily just yet. And they're also protecting progression here that has been claimed from sellers. As you guys can see, really nice lower high on top of that progress being claimed from sellers here. So this is all really subjective until we see how price kind of reacts to the 45 gap fill. If you guys go over to Amazon, this is another really fantastic chart here in my opinion, in terms of just looking if that buyer wants to continuously participate where he was participating here on all of these daily candles. As you guys can see, reversal candle here on the daily chart, a lower low that was actually absorbed, a third lower low that was absorbed. So technically this could look like some sort of 4 lower low absorption, meaning something that looks like it's kind of like the ideology around the falling wedge, except context matters way more. Rather than just like looking at a falling wedge and saying, oh my gosh, okay, this is going to squeeze. Four lower lows accumulated essentially is what I would be looking for into this gap. So we're at 1, 2, 3, and then if we get the undercut of all of this support and we get a very strong buyer footprint, and then eventually just a reclaim of the support that was a fake breakdown beneath essentially, which is like the March swing lows currently that we have here around like 190, 189, then I'd be looking for a long side trade as well in this one, back to the upside, probably to like the low 200s. But it's all subjective, like I said, until we get that clear signal coming off of the gap fill. If we go over to the rest of the tech market, obviously Google, one thing that I've been kind of worried about with Google has just been this area on the chart where there's still a slight gap fill, there's still a swing low, there's another gap fill all the way down here on Google, right? So there's a lot of targets in mind here for the downside. On Google in terms of gaps, in terms of retests of very critical levels, in terms of if you guys are looking at retracements here from like our previous swing low all the way in 2022, because there was really never any other swing low to grab in terms of fibs to be able to say, okay, that's a very discounted area that I really would like to see. This is all basically just pulling down into a much larger perspective of discount. Very, very disgusting looking buyers here off of, I'm sorry, sellers here off of the breakdown of the support here that happened into Friday. Basically what it did was broke beneath this daily floor. And if you guys go take a look at the 15, it was just pure blood on like literal just bidless action here. Very, very weak looking price action the day prior to that. So in terms of reversion here, back for the upside, guys, I still do like Microsoft, but this is not really the best looking weekly candle closure anymore. The initial target that we had here for reversion on Microsoft from the bottom end of the chart on this weekly sweep and 3 lower low accumulation was actually hit here on the first initial gap. Almost to the T here. This unfilled gap right up here at 396.89. Also basically hit with this gap right here. So those were my first initial price targets. The second price targets were going to be around 405 or like 402. So all of those areas have been met. And now we're seeing very bearish signals off of those areas. So I'm not really going to be too worried about this one just yet. I think where the better trade to be taken at would be right around here on NVIDIA with a minus 1.58% and only 230 million volume traded on this day, which is not the craziest volume in the world in regards to like the big increase in the NASDAQ, right? We had larger increases in some of these other names relative to the rest of, the previous 3, 4, 5, 6, 10 trading sessions. Volume remains very elevated here on Tesla, while I do think supply is exhausting off a little bit on NVIDIA. So I really want to see also with NVIDIA in regards to like the MAG 7 gap fill as well as QQQ undercutting this support. SPY meeting its phantom print and getting beneath that phantom print and filling this gap down here into 551.42, potentially meeting that 4400s target that we've had in mind here on the SPX, which is down into here, right? It's down into this higher low sitting right here. I want to see how the reaction that would likely push NVIDIA to 104.77, possibly down into this massive gap that has been defended here from the August 5th day, as well as higher lows throughout the September lows. I want to see what happens around there, because if we get a very large footprint candle, we kind of know what's going on in terms of the overall market. I would say that NVIDIA would likely be the long side trade. I also want to use kind of a gauge here with NVDS as well. We're talking about NVDS revisiting all the way up into 30. Our target is going to be met at this gap fill, probably into open or probably by Tuesday. And then, yeah, I would really like to see kind of what goes on over there. If we meet the NWOG, we're going to go over to Qs. We're going to talk about Qs and SPY. We're obviously going to get a gap down, and that gap down is going to it's likely going to push us beneath the swing low. If I go take a look at like the 24-hour quotes, I'll go take a look at where SPY and QQQ are sitting at right now. But it's likely going to push us beneath the current low, which is perfect. It's at 551.44 right now. So it's actually right off the phantom print right now as we speak. QQQ is at 462.56. So it's still primarily a tech-driven sell here. It looks like 462.60. 462. Okay, yeah, so this is all perfect. If we push, we're going to gap down to right around here. If we push up early, it's going to be hard for the long side trade unless we push up early, we consolidate throughout most of like that range of quarterly OPEX, and then maybe we get some sort of like delta D hedge or crazy leg on the quarterly OPEX candle, or maybe after, or on the power hour of that day. And then that maybe pushes up us up here. If you guys take a look at the weekly chart on like some sort of like weekly hammer that closes above this weekly wick and closes above the previous weekly's candle's low. That would be the best ideal scenario leading into April 7th. I don't know if that's necessarily going to take place, and I do think with a gap down, the redistribution could take place, but it would be a worse trade on the short side if we were to get a gap down and then obviously find some sort of very large buyer footprint. Everyone thinks it's going to be a reshort, and then it's going to be a reshort for a very small amount of time until it catches a support on smaller time frames, builds out a little bit of range for like a higher low, and then eventually we start squeezing back to the upside is kind of what I'm looking at in terms of if we like get a gap down, pop, and then reclaim those levels. And then obviously from that point on, we now have a path of least resistance for the upside since we had a fresh test of supply here on the progression of the earnings gap being retested into Tuesday. This is why I said the short side trade is likely going to work and play out here. On the reversion targets being met, like I said, guys, I mean, these are unfilled gaps that have been left behind for a very long amount of time. Most of the volume, as you guys can see on the NASDAQ right now, is actually at the lows, right? And then we obviously have a very large support with a SPY phantom print right off of that support as well. So the fact that we're undercutting everything, the fact that we're actually going to open off of that area in the S&P leading into the new week, leads me to believe that the long side trade is going to work out even a little bit better. If the gap up did come, I would be looking for some sort of like double dip kind of trade. That wasn't the case though, so all of my focus has got to be on the long side. I'm not the type of guy to really short the whole, and I will remain primarily cash until that signal kind of shows off, right? We have very heavy data next week, so this could be a complete and total wash on the week. This could be a complete and total nothing burger where people are trying to front run everything, and then everything just becomes an absolute dud, and you get IV crushed, and then it comes into the next week where the true volatility sits, and there it is, right off CPI, right off FOMC minutes, and right off of all of that stuff going on. So yeah, it's going to be very tough this week, I think. And I know that, and I understand that cash is a very valuable position right now. Right now, NVIDIA is actually sitting at 107 on the 24-hour trading. So, oh, that was bad, man. 107 would be right around here off of, if we go take a look at the weekly, it would open up right around like this weekly wick. So I'm going to just not really deal with this one on a Monday. I'm going to kind of let it see if it wants to reclaim this gap, see if it wants to, reclaim it, reject it on another lower high, go for a swing low, find like a 2 or 3 lower low accumulation, and then eventually cling on to that swing low or cling onto the gap, and then it would be a really nice reversion here back for the upside. I also want to see what the dark pool orders are coming through throughout most of the week, because I think that's very telling leading into the data sets. We obviously have a bear end log, so if we extend from that bear end log, I'm probably going to have to start looking at sell climaxes that like time the low leading into some sort of data. And if we don't close the new week opening gap from the downside this week, it's going to happen mid next week on the data. That's the best case scenario because I would remain cash and then I would hammer everything in the next week into, like April 10th. If April 7th started to, that's whenever the flows are coming back, that's whenever everything would likely start to be reclaimed, and then we would start to find some sort of consolidation or higher low, which would land around after flows are returning and after like April 7th to April 10th, like April 11th, like that general window. If I go take a look at the economic calendar, I could tell you. We have April 10th being CPI, and then we have PPI April 11th. So it's about April, I would say April 9th through April 11th is kind of like the window I'm looking for. So we could find a perfect LPS at some point here, April 9th, April 10th, April 11th. That's why I said cash is a valuable position. That's why I said, you got to really, really calm down on everything in terms of like trying to really speculate right now on what's going to happen. If you guys go over to MU, This is a really nice path of least resistance building on all of this area on the upper extremes from like 107 all the way up into 114. Um, and with that being said here, guys, we have a very, very liquid level to obviously undercut in terms of this support here off of like 87, 88. It extends down into 86, and then eventually, if the market does want to fall off of a cliff, I would be totally okay with that. I would know I would not catch any of it, but this would all come down to the finalization of the campaign potentially on all these buyers that could not commit at the upper extremes of the range. They would fill the gap. They would take out all of these buyer stop rates that's sitting on the support above the gap. It's something similar to the MAGS ETF. And then it would just undercut everything, reclaim that on a buyer footprint, and then reclaim the internal support. And then obviously we would trade back to the upside towards these gap fill targets. And it would be a really nice swing trade here leading into May. Do I think that that's going to play out to perfection? No, not necessarily. Tesla's actually down 4.65% right now. It's at 251.30. If we go over to Tesla at 251.30, that's actually right within almost the bottom of the gap. Wow. That's also almost within the bottom of the election gap as well. But from the this is all just a nasty rejection, guys. It's disgusting. So you guys gotta kind of lay off the gas here a little bit in terms of like, oh, Tesla's bottomed. No. It's going to stay in this range longer for longer than people can think. So yeah. So everything else within the tech market, obviously banks, they sold off pretty aggressively here, guys. And this was a nasty retest of the previous distribution going on here throughout like February. I talk about this as like a gauge for the market in terms of overall health, in terms of like kind of like how the market's going to transition. Is it going to go risk off? Is it risk on? And whenever banks are getting hammered like this on bidless action, and it's a really ugly day for the banks, you typically don't see that kind of day being reversed on immediately. Obviously, you could get some sort of consolidation, but the continuation of that day can get really ugly if we get a really nasty, weak, ugly rest period into tomorrow. Obviously, this is also off of a very important level here on XLF itself. Do I necessarily know where this one's going to stop from? No, and that's why I said, shorting this one up here from the lower extremes of the range on the retest around here was a much, much, much better trade than trying to, this is not a name that I would ever use alongside vehicles, really what I'm trying to say here. But we do have a support down here. If the market really wants to die off, I'll then probably just switch over to banks and wait and see for what banks can do off of the entirety of this gap down here, which is also going to take out a double bottom support. If you guys take a look at like 47.50 all the way down into 47, and if they undercut all of that support, let's just say, and that's a stretch to get all the way down there, guys. It's not really, but it kind of is, because this is the swing low here on March 11th for banks. We go over to swing low here March 11th. I mean, all it really needs to do is push SPX down into the low 5400s, which is likely my target. We go over to XLF and we can see how that can kind of follow through simultaneously as we get into this support down here, this support zone. And then beneath that support zone, like I said, we just have a very clean target in mind. I want to see what happens down here on banks. If there's a very large buyer down here on banks that is finally accumulating its third series of accumulation, essentially, from this leg and this leg to the third one being strong, I mean, that would also really build up my conviction in terms of all of the bank charts being balanced out. If you guys go over into a lot of the equity within banks, they don't really look horrible just yet. A lot of these do have head and shoulders, but I don't really care about head and shoulders. I more and less care about levels and whatnot. If these want to bleed down a little bit lower into like a 2 or 3 lower low accumulation into the bottom of the gap fill, then that would be fantastic. I don't know if they're all going to do that, but really, really, really interesting candles in a lot of these names. I mean, BLK, look at that one. That's at a huge critical spot here on the weekly chart, and it's actually losing its support. Um, it's losing its support. That could be reclaimed. It definitely can. But this is not the best looking chart, is really all I'm trying to say. I could easily flip short, guys. Obviously, I am looking for the long side trade just through, time, just through everything going on in terms of like seasonal flows returning back to the market. But I could switch in a heartbeat, right? On a retracement, it could all end up looking really, really weak and really promising for continuation to the downside. That gets everyone bowled up, and after we get a small pop, and then we take advantage of the downside. It could flip in an instant, but that's all I'm really trying to say here in terms of the banks not really looking too good. So you want to be relatively risk off leading throughout most of the week. If we go over to XLE, XLE actually has been holding up very, very, very well. I actually want to pay attention to this sector and continuously watch this one. Um, First of all, I'm going to just add some things to my watch list here as we move forward. I'm also going to be covering over a lot of like China and PLTR, Hood, the retail favorites in the growth sector, and I'm also going to be watching TSM. Um, so as we know, I think NVIDIA could obviously be bottoming or coming close to a bottom. Don't know exactly when that is the case. I don't have a very clear target in mind here for NVIDIA. Like I said, what I would really ultimately like to see here would be a third lower low that's in kind of playing in confluence to these two lower lows ever since the deep seek gap down. The third lower low being the climactic one that obviously sends this back for a snapback reversion trade, maybe all the way back up to 125. However, like I said, I don't know if that's going to be exactly the case. And like I said, this low down here on being an accumulative low is just a little bit subjective for right now. We have to wait and see how the tape behaves, how the volume behaves, how the new week opening gap on the NASDAQ behaves and whatnot. If we go over into XLE now, just like I was talking about, we had a really nice ZOM swing trade. Really nice high tight action leading into the end of the week, holding up relatively well in comparison to the rest of the market. If you guys go over to the XLE sector fund, it's actually a pretty solid chart that's holding up very, very nicely in comparison to the rest of the market. If we go over to the 24-hour quotes, aren't going to be very accurate for any of these things going on here, guys. But if we go over to like CVX, for example, if you guys go take a look at like that monthly chart on CVX, we're at the point in time where a breakout can be very, very, very easy to see and easy to spot, and it could be very, very easily moving here on this weekly or on this monthly chart. If you guys go to the weekly chart, it's breaking out of this massive consolidation here that is now potentially breaking its structure on the weekly. We have a very large level of resistance in the high 160s that also kind of extends down into like the low 160s to like mid 160s, and it's really, really nice. It's holding up really, really nicely in comparison to the rest of the market, right? And this is obviously that one of those risk-off rotations that take place whenever tech is in a really bad situation. And as of right now, guys, whenever you have the market dying off and then you have a name like CVX, for example, just building in a high tight flag off of a level that's been respected so long, that to the point where like you start to think that it starts to really show off that this could potentially be a path of least resistance here on all of these areas being soaked here in CVX, right? So really, really large volume in the XLE sector on the weekly chart that we've also seen as of lately. I talked about this on Twitter for quite some time here. Very large volume here on March 3rd. If you guys take a look at the volume profile, this is the heaviest volume that we've seen on this sector since all the way back here in 2023. And then the volume next to that would be like 2023 as well. And this is a minus 6.85% move. The other volume is also what led us to a pop on the sector itself of 13% within a month, right? So we already actually made a little bit of that move, and it's hard to deny that you could be a little bit late to something like this. But just the overall behavior of everything going on in XLE right now, I don't really mind the sector at all. I would probably consider a trade on this on a shorter time frame perspective here in regards to kind of something that will like match the tech weakness for a little bit of time, and then obviously once I start really developing my long side conviction as structure starts to show maybe on an undercut like of the lows in the S&P, and then you start seeing a lot of the targets being met in tech. That's whenever, if I see those buyers, that's whenever I would obviously kind of stray myself away a little bit from the energy sector and whatnot. Everything else has been pretty like boring in the market, I would say. There's not really any chart that has a true edge in terms of looking at potential for, I would say, like a super good like 3 to 4 to 5 R type of swing trade. I don't think that's even possible right now in too many charts in the market. So I really would want to avoid that in terms of like looking at a lot of areas of the market. I kind of want to hold my focus to primarily just tech and kind of being a two-way trader until we get to that April 7th window. If you guys take a look at RTX, this is a fourth higher high potential of a climactic top building out here on RTX. First high here, second distributive high here, third distributive high here, and fourth distributive high all the way up here on this week, actually, on the current week high or last week highs, right? So basically what I'm trying to see here is if the levels want to fail on where previous resistance is now failing to displace above. As you guys can see, a displacement failure happened on this candle, and a displacement failure is now happening actively as we look at this chart here on the weekly as well as the daily. Really nice confluence of all time frames. And this has still got decent areas in terms of price targets that we have in mind. There's one that remains all the way down here at 121. That's not anything too relevant. What I would more and less target would just be like these previous breakout levels first, or just these higher low areas. There is another gap fill remaining to be filled right around here as well. And this isn't like a 3 or 4 higher high distribution. And if you guys go take a look at like something like LMT, this doesn't really have the best look right now, guys. Obviously, these could find a little bit of a cleaner retracement back to the upside throughout this imbalanced candle to be able to collect liquidity within such a capitulation candle. As you guys have known, everything that I like to trade, I would love to see retracements into those imbalanced candles. So if this continuously got like a weaker bid and then it just ate shit, I would more than likely also kind of expect RTX to follow the same way, which would likely be just like some weaker looking consolidation somewhere around here, and then just blood all the way down into like this lower end of support into the high 120s. Option spreads are quite terrible on this. I'll probably just end up shorting shares. I'll actually go take a look at the industrials right now and just see where they're actually sitting at. Right now, RTX is flat on the 24-hour, and LMT on the 24-hour is flat as well. So I can't see these ones being bid, and especially if tech wants to start kind of like moving pretty nicely as well. I think a lot of dispersion can come out, like money rotating out of these, money rotating elsewhere into like your tech and whatnot. If we go take a look at like Pepsi, that's another backup sector that I have in mind in terms of like if the market really, really, really wants to bleed. We obviously have like the consumers to take a look at, but a lot of these don't really look good. Obviously, we have like Coca-Cola in a disgusting looking headline here. Really nice reversion here back into the close here for Coca-Cola. Really disgusting volume on this news. It was like RFK banning people from getting food, Pepsi, like Coke and Pepsi on food stamps. Fantastic rule, by the way. But if we're taking a look at this chart, this one don't really look too bad. I don't really care about news. I don't care. I do not give a shit. Um, Pepsi, not so much. But yeah, this is just going to be in the back burner for me in terms of alongside trade. I'll probably end up throwing Coke. Like I said, it's all just pure speculation until we see what the overall market wants to do, what the bigger names want to do. BABA targets are being met. We talked about the short side opportunity here. That's kind of in regard, it's kind of respecting the fact of this being a distributive looking candle. At the top of a trend, very heavy volume in a neutral looking candle, neutral looking spread on that daily candle. And like I said, this is all has just been a pop into where we would find fair value on BABA, right? It was on a historical run. 147 was the start of this gap right here, 145.30 to be, or 147, yeah. And we go take a look. Everyone was trying to trade this as some sort of breakout on the double inside bar day, whenever this is just really ultimately just a very disgusting looking chart that's consolidating, yet it's failing the daily breakout here around 144.50 to like 145-ish. We'll call it 145 off that psych, which was this current trading session's high. And then we obviously had the gap down. If you guys go take a look at the HSI futures, that's also where we had the 3 higher high distribution happening. If you guys take a look at the weekly chart from swing high, swing low, 618, right? So the 618 was retested. Now it's putting in like a small reversal look, and there's still a very large zone within HSI itself potentially for a retest, right? So if that gets retested and then we start seeing this area of the market really start to get an aggressive bid, BABA targets are being met. There's not any sort of absurd volume on BABA. It's been very, very weak looking price action to the downside ever since this day here on March 20th. These gaps are filling right around here. Then that could be a fantastic trade here back to the upside. And preferably, I would love for this one to bleed all the way back out, down into the 120s. And I do think it has the potential for that, and that could be fantastic. But if it doesn't really look like it wants to do that, I'll have to go look at the Chinese economic calendar. I'm going to throw this one on the watch list for now as a long side trade, maybe a short side trade if this starts popping its way back up into this gap and then it looks really weak. I do think if it's really weak, we are going to eventually fail the gap or create one more new high, which is another breakout failure, and then we're probably going to pull back down and really have to reevaluate this name on a true push down to then retest these breakout areas. We missed the PLTR short. No, we didn't. We had, I mean, I had Hood. Hood and PLTR are very similar. I actually thought Hood was a little bit better. So I'll go over this one now. Wait, why? Is PLTR like dying on 24-hour? Or are you saying in terms of like, it's down 4%. It's not that bad. So yeah, we go over to the, as you guys can see on my short side list here, I have TSM, Hood, PLTR. I actually had a position on this one that I sold for a small win this past week. I don't know if you guys saw anything about that, but I did talk about it. Basically what we're looking at here was just this gap being defended right around here, but I preferably wanted like 100. The $100 psych. But this is a really aggressive rollover from the highs, right? And this was all just a short squeeze to the upside whenever everyone was trying to like time the top on right around here. And then it obviously led to a very nice squeeze. And this was just a simple positive VPS double beat gap and go, where everyone, thought of like P ratio and whatnot, and everyone was like trying to time the top and like, oh my gosh, what's going to happen here? And it just ended up being a nasty squeeze. And then obviously that led to a very unhealthy look here for Palantir, whatever you pronounce it. And then obviously the rollover got very, very aggressive looking. It filled the earnings gap. It undercut it and based it for a little bit of time, but supply was obviously exhausted as the break and base just never worked out beneath this gap. This was all preliminary supply going on over here throughout November. So you guys can see very large volume on these candles, very large volume here, right around that candle high as well, followed by very, very weak looking displacement above the previous high. So this was all preliminary supply over here, right? And then the gap up followed by the short squeeze. Now the rollover is happening. Price action should obviously respect everything slicing right through the earnings gap of plus 23%, 24% on the underlying for this day. That shows a lot of intention behind where they want to push Palantir, Planeteer, whatever you call this piece of shit, wherever you want to push this to. So the fact that this all rejected the gap is just it makes a ton of sense, and now it just looks horrible. It just does not look good. If the market does want to recover, and then obviously the reshort comes after the market recovers, I'm still going to short Planeteer. I'm probably going to short either that or Hood. I would love to see 100 on Palantir and just see what happens. Is it called Palantir or Planeteer, man? Palantir. Oh my goodness. Everything else is no bueno, I believe, in the market. AVGO, really, really, really disgustingly weak. Really no edge here on AVGO. It's failing very critical levels. If you guys take a look at the EMAs here on the daily and the weekly, they're all above price, curling down on top of lower highs. It's a very weak looking sign. INTC, I'm going to cover this one real quick and then we'll wrap things up. The scan this week's very boring, guys. I'll keep that in mind here. It's all very, very, very boring. Because I ideally want to just trade like SPY and QQQ. If you guys take a look now at Intel, this isn't a really nice looking chart just because we have this gap fill in terms of target ideas here for the upside. Everything is absorbed from the bottom end of the chart. And if semis want to push, and they want to push strongly, I think Intel is still in that area where we could obviously see, everything being absorbed in terms of leftover supply off of people that are trying to sell the retest around here. All right, and as you guys can see, that has been happening on the retest ever since September of 2024. So this has been a level that has been absorbed for quite some time, right? And we've had a triple top type of scenario here around the mid to high 20s on INTC. So now essentially what I'd be looking for is some sort of buyer to step in off of defending this very heavy volume, 243.26 million volume gap up. I would likely think that this gap up is now going to be defended, especially if it ties in really nicely with like I talked about, like the plan with like a SPY and QQQ on a really nice snapback type of rally going on here into April 17th. So if that wants to happen, I would say that like MU and INTC would be two names on my list here. This one within the gap, and potentially also MU within like a spring scenario. I would think these would be two really, really nice long side vehicles here for the upside. MU is a fantastic company from like a PE perspective, as well, like just a fundamental perspective. I think on the new positioning and any sort of long-term positioning, they will buy this one, and this has been a name that if you guys take a look at the filings for someone big just bought this one. I can't remember exactly who because I follow a lot of different guys, but someone very big just bought this one on the on on I think it was this quarter actually. Um, Druckenmiller, he bought it, and he put some money into it too. And I think the chart looks fantastic here on the weekly. It's so consolidated, it's not even funny. This one could revert back to the mean here in an instant if it wants to break all of this compression that's been happening ever since like August of 2024. It's actually one of the best performing semis of this year. And everything looks really nice on this base being taken out, and then just a fat buyer that's absorbing, taking out all the stops, absorbing everything, and then just a fucking nasty move back to the upside once we find that spring beneath all this support. And I'm not saying it's going to pull all the way back there. I'd throw a fat pitch in there. Yeah, I would probably end up selling shares. This would be like a TSM level conviction. Like you guys remember how heavy of a conviction I had in like the TSM distribution, like all the way up here. That would be the level of conviction I would have for an MU long side type of like swing trade going on over here, leading into probably like June. Not June. June expiration. I'm sorry. I think the market's going to perform like shit this year, so got to be very careful with any sort of like long side trade idea. Uh, like into the highs or into the gap fills or into the targets that I have in mind for the upside. Let me go take a look at NVDS real quick and see if that's at 30. I believe it. I believe it should be. Beautiful. Okay, NVDS is at 30. Okay, this is all lining up very nicely. If you guys pay attention to my Twitter, I talked about NVDS also having the possibility of reaching 30, which is now being met. So yeah, I mean, not gonna lie, that's all I can really talk about as of right now. In terms of bank names that still have obviously room for the downside, I'm probably going to be watching Schwab. The reasoning as to why, guys, is this is in a 1, 2, 3, 4, and a 5th higher high climactic top on the redistribution zone. On the distribution zone from the banking crisis. So essentially this whole entire range, and they've been obviously redistributing that from the banking crisis's whole entire range, right? And this is the 5th higher high, the 5th climactic top over here, right? And there's a lot of volume behind that. This is also another very heavy conviction short side trade that I had. So now essentially what I'm looking for here, guys, we can take a look at daily EMAs. They're actually closing ever so slightly beneath. How are banks actually gapping down? Are they gapping down bad? I don't think they are. No, they're actually not. So if banks want to participate, why does Schwab say it's down 3.6%? These are all just way too low a volume to even tell. That's why like doing a scan is sometimes so stupid until you like get into like a Tuesday just to have a little bit of a glimpse for like what's going on. Uh, like if Schwab is like sitting around this area, I'm probably gonna think about like hammering it again. I don't know. Probably. Dude, like guys, the vol that you're paying for in this shit and like everything that ties into like you know, if you catch a move down into like 75 from 78, like you're ridiculous you're you're ridiculously paid. Like just retarded paid. Uh So yeah, that's all I really have. There ain't really much more to talk about. Be careful until quarterly OPEX. Be careful until April 7th, be careful. Wait for structure to develop. Wait for levels to be reclaimed. Wait for price action to respect the areas that we're talking about in terms of the phantom prints, the previous levels that have been very heavily bid. This has been an area where I think they've been very heavily bidding and layering out in the dark pool. You guys go over to QQQ, you guys can kind of see the same general thing going on over here, and then obviously the mags confluence over there with like these gaps remaining unfilled for the downside. Amazon also being a fantastic looking chart here with still some room here for the downside and a very, very critical previous weekly level to obviously pivot off of as well for some sort of weekly higher low. There's also a lot of support built on these 3 weeks of price action. So if this were to be a fourth low that is absorbed, that would also be a nice idea for a long side trade. Obviously, Tesla, like we talked about, election gap, still needing filled all the way down into here. From 217 on down into 213.65. So that's, you know, $4 and what, 35 cents for obviously the downside target to be met and the whole entire gap to be filled. That's it. That's all I really have. So I'll talk to you guys early tomorrow because I'm gonna have to wake up and really put in a pre-market prep and just see what goes on. Because like it's hard to make plans right now whenever everything's gapping down. We don't have the true openings of a lot of these different names just because they trade too low volume on the 24-hour to see where things are opening from. But like, for example, my trade plan could flip from very quickly from like, you know, it could go from like looking at Nvidia to like Schwab. So we just have to wait and see. But yeah, I'll talk to you guys tomorrow in the morning. I'll see you boys.